All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is Saturday, March the 8th, one day prior to daylight savings time. So if you guys forget, this is your reminder. Daylight savings time is tomorrow. Clocks will push forward. Everything in the market will be fun after daylight savings time, right? Anyway, as per usual, we'll be breaking down the Dow Jones, the S&P 500, the NASDAQ, and we'll also take a look at gold and the volatility index inside of the market review. If there is a pre-market plan, it makes it easier for me to do the reviews. It's not a necessary thing, but if you guys do post a pre-market plan and a members pre-market for your particular instrument, if it's easy to read, easy to explain, I'll go over it with the pre-market plan. Shout out to Alex. He's definitely been making pre-market plans now for his members pre-market plan. I'm going to get with him, give it a little bit more detail before I add it to the market review. But I really like the fact that somebody is, taking the wheel on the NASDAQ. I used to do it all last year, but I'm not doing it unless I'm trading it. So anyway, the current conditions for the Dow Jones on Friday was we were consolidating at the low of a trend, right? So inside of consolidation, we expect that sequence of Wyckoff to play itself out, right? Consolidation, manipulation, and then expansion. We also knew we had NFP, which usually brings us a big doji inside of consolidation, where we run the high, we'll run the low, then run the high, then run the low again, then ended up running the high. Well, guess what? NFP ended up doing exactly that, right? If you're confused about how NFP works, I strongly suggest, right? I've said this every month we have NFP. Go back and look at the last 12 months of how NFP delivers, and I promise you, it delivers the same way every single time. And this day was no different, and we capitalized on it, made some money, and walked the fuck away from the market. But bearish, below 43,358, we were looking to be bearish. We stayed below there, right? Bullish, as long as we stayed above 41,967, I wanted to continue to be bullish, right? The closer we get to those levels, right, 41.96 or 41.967. I actually meant no, this is right. 41, is this right? Yeah, okay. Yeah, 41.967 was that's the low of the dealing range, right? So we ended up getting really close to 42.123. We actually tapped into 42.208. Now, I'll talk about this black line once I get a little bit more in depth into the review. Yesterday's price action had us barely trading below the previous day low. However, we have been unable to take any significant highs as bears continue to apply pressure via the VIX. As long as we stay below yesterday's high, I want to look for ways to play the downtrend. But once, again, I don't know what I was writing right there, but I'm looking for longs at the low of the range and higher time frame demand. Now, that doesn't mean, I hate to say only, I used to say only, right? It just means the closer we get to the demand zone, the more areas I'm looking for the market to reverse inside of this range. And I'll explain to you the higher time frame range so you can get a better view of what's going on. And things that I wanted to note was there's been multiple catalysts today. So sizing down is my counter to expected volatility. Ended up working great for me. I was in 5 micros. I made $750, right? Like, you don't need much when the market is moving, when the S&P 500 is moving 140 points to the downside and 140 points to the upside. You don't need that much size to grow your account. You just don't, right? So what was my plan? On the Dow Jones, I was looking for buyers to defend 42.123 through 41.971. And we can look to long the market targeting previous day low, the daily fib, and then potentially all the way back up to the end wall, right? That's essentially what we did. But you guys really need to take a look at these pictures because I don't write everything that I plan on doing. I just put pictures of everything that's there. So if you see these little 3 black lines, these are representation of a fib that's coming from somewhere, right? If I got a 3-way fib, normally I just use a 50% fib. But if I got a 3-way fib, it's because we're stepping into a new dealing range. And I want to see 30%, 50%, and 70% of that new dealing range. Because I know the first time we tap into that new neighborhood, we usually go down 30, 50, or 70%. So that's why I have that. And then I have the extreme, which is the demand zone. Okay. And I'll explain that again here in a second. The low of the range, 42,560 to 42,421. I believe that was the bounce right off the freaking NFP candle. So that was saucy, right? And then the high was 42,750 to 42,666. And if I'm not mistaken, I believe that was the high before we dumped all the way down here. So the pre-market plan basically was spot on the Dow Jones. We'll go down a little deeper, pause. We'll go a little closer to price so we can analyze exactly what happened on the day. So dropping down to the 15-minute chart on the Dow Jones. Again, I'll leave the macros on because in my opinion, it's really important to understand how time delivers price. All the way over here, we got the NFP candle at 8:30, right? Like this is a really important market review because every month this same shit is gonna happen. If you get caught off guard by this NFP candle every single month, it's not my fault. It's not the market fault. It's your fucking fault. If you're failing to go back and read the charts that are given to you, it's like showing up to class knowing that there's a test on that day and you didn't even bother to open the book. And then they tell you it's an open book test, but it's timed, right? You're gonna keep failing because you're gonna keep looking at the wrong spot because you never even read the fucking book, right? So I think it would behoove everyone in here to go back and study everyday NFP or CPI or PPI or any of these big news catalyst events. They deliver very similar every single time that they happen. So it would just behoove you to go check it out, get that information so you at least have that data in your brain, right? For me, I've done the research. I've read the fucking book. And I'm telling you, every time I see this thing completes as a doji, right? I already know we're probably going to go down first, right? And by the closer we get to the PM session, we're going to reverse the whole thing. How do I know that? It's because I read the book, right? Like I read the book. I did the back testing. Me and Pip sat in here I think it was like a month ago. We sat in here and I went through every single NFP for the last 2 years. And for the last 2 years, NFP delivered exactly like this. I think it was only one occasion me and Pip saw it that it didn't deliver exactly like this in 2 years. So I'm gonna take those odds, right? Anyway, let's continue. 8:30 candle prints. I have no desire to ever trade this candle, so you can just miss me with that shit. It's just never gonna happen, right? However, there's good vital information inside of this candle. Why? Because if we go down to lower time frames, which I'm gonna do for every instrument, so just get comfortable, right? In the 30-second time frame, there is structure inside of that wick, right? If you look at the 30-second wick, now I wouldn't trade this candle the initial move, but I will put a trade on if we fail to get back above the high. I'll short it, right? And then just target the lows, right? I didn't want to do any of that on Friday. Why? Because I was being conservative, I was being cautious, and I hate to ruin my Fridays. So that makes me a little bit hesitant. And I knew that going into the day. The only thing that comes with that is fighting some motherfucking FOMO because there was a lot of it, right? Knowing that this was going to go short, I didn't trade it. That was my first set of FOMO that I had to get through, right? 859.10 comes down. Now I know we're at the bottom of my range, right? And mind you, I was on the S&P, but it delivered the exact same way, right? 929.30. Not just 929.30, but if anybody's ever heard me talk about Dow Jones or anything in regards to 929.30, I told you guys I've back tested not just 929.30. I've back tested 929 in 30 seconds. Why? Because this is when the last sale candle comes in before the market goes apeshit, right? And when it delivers properly, right? Sometimes it'll keep going down. It's never going to deliver the exact same. But when it delivers like this, it is supposed to be an automatic entry for me. And this is what didn't send me on tilt, but this is what gave me the FOMO. I knew at this moment I had to put my hands in my pocket, right? Because I missed this trade, price rolled up, came back down here, and I missed it again, right? It wasn't even that I missed it again. I just had already come to the conclusion that I wasn't going to trade it. So I was just like, fuck it, let it do what it's going to do. Just get ready because you're going to FOMO. But what helped me with my FOMO, right, is understanding what I wanted to accomplish, why I was waiting for.
You know how many times I almost put down with 2 friends?
Oh my God. And I'm like, why'd you bring it in here? I'm recording. Thanks, babe. Anyway, so ultimately what I was looking for was I was trying to wait for the 10 o'clock candle to open or the last 4-hour candle to close, right? The 4 o'clock candle that I'm referring to is the 6 a.m. candle to 10 a.m. That candle closes at 10 a.m. If you guys think about the market on a higher time frame, right? We're gonna go to the 4-hour for a second because we got time. It's Saturday, right? So we go to the 4-hour, right? Usually in a trending market, right? The 4-hour candles have objectives, right? They're either going to continue to go up to break the high, or they're going to continue to go down to break the low. I want to take part into a fresh 4-hour candle. Doesn't mean I can't trade outside of that. And that's the mistake that I made that gave me the FOMO, was I saw my setup even before that 10 o'clock candle. And when you don't take your setups, that's when you get in trouble. Okay. So anyway, I passed on two. I wasn't going to pass on the third one. I was just waiting for price to get up into the 950 macro. On the S&P 500, I'll review the trade exactly how it was set up. But when I tell you this shit delivered damn near the exact same right at the daily fib on the Dow Jones, it was beautiful. We traded down into 920, 930. We traded up into 950. 4-hour candle is closing inside of this consolidation. Consolidation, we're looking for manipulation to the upside because I'm trying to go short, right? We get the manipulation to the upside. You short the market up here. We expand to the downside. I got right out of the trade right here and I was done for the day. This trade on the Dow Jones was 778 to 578. That's a 200-point trade. You don't need much more than that. Like, you don't, right? Whatever your size is, you're good money at 200 points. Right. But let's say you wanted to get back in, which is something that I reviewed on my trades last night. I was like, I got to get back in next week. Now that I got kind of like that first week of, jitters out of the way, mirroring the accounts was kind of kind of like a mental struggle. And then trading on the new account that I worked hard to get on was kind of a struggle. So now I got those jitters out of the way. Now I'm like, okay, I want this scalp. I want all the profits here. And when we come back up, I want the re-entry, right? Because that's the shoulder, right? So 708 was the re-entry, and this is the one I'm trying to hold, right? We come back up into 1025. Again, every time we're trading up into these macros, you can spot that consolidation, right? Before we end up trading back down into 1040. We get this immaculate fucking rally back up, random rally at 1050, trying to trade up into the 1050 and trap all these buyers up here, right? Like, that's what the market's trying to do. If you watch that Mark Douglas short that I dropped into the chat, he's explaining to you how hedge funds get your money. When they come down here, their thought process is, okay, we're in consolidation. How can I manipulate this pattern so that I can get rid of my sell positions? Well, it's simple. I'm going to buy up everything from 422 to 42679. They bought up everything within 200-point range, right? In 60 seconds. These are 30-second candles. They bought it all up in 60 seconds. Why'd they do that? Because they're banking on you being unable to control your emotions. Because most people, when they see this aggressive candle coming in, it's only 30 seconds. So they're not going to buy on the first one. They're not going to buy on the pullback. They're going to buy once we break the high, right? Expecting it to just keep going. And that's when the hedge funds start unloading. Right? Because they know a lot of people are going to be trapped up here. So now they're going to sell them and they're just going to keep selling and then they're going to chop them up in here. Because the same people that bought here are now playing with your position, right? They're fucking with you. Why are they fucking with you? It's not that they fucking with you. They trying to get rid of their sell side position. So they just keep buying it up off this level while they're still filling their sell side positions until they're ready to absolutely collapse price. And if you look at the 30-second chart, you can see how they're just slowly walking it down, right? And on the way down, you know what they're doing? They're enticing buyers the whole way down. That's why we try to preach to you guys, don't sell the lows because it's going to pop back up. Because all they're doing is every time you try to sell these lows, they pop it back up. Sell the low, they pop it back up. They sell the low, pop it back up. Because they're just searching for your liquidity until they get to where they really want to go. Remember, whenever the market's selling, it's because usually they're hedge funds. So if they're coming down, they're usually filling their positions to the upside because at some point they're going to reverse it back up. We get all the way down to 208, right? And now you see the order flow shift. We go from making lower lows and lower highs to finally putting in a new high. This and only this is the reason why I draw this little box right here. Pippi calls it the pickup box. I call it the money bag zone, right? Like whatever it is, whatever you want to call it, is your system, right? I've been calling it the 5-minute money bag zone for the forever, right? Pippi calls it his pickup box, and it doesn't fucking matter. As long as you understand why it's here, that's where you make the money. Once we take these highs, everything below this level or inside of this box is a buy, right? Therefore, I'm not buying when price comes up here because you're going to get smoked, right? I'm not selling when it comes up here either because I'm not in an area where I want to look for sales. We're below midnight. It doesn't fit my system. Therefore, I'm looking to buy, and I'm looking to buy inside of this box, buy here, buy here, buy here, and then I'm done buying. That's where my pickup session is done. And then I'm targeting all the way back up. Why am I going all the way up? Is it because I'm a greedy fat pig? No, it's because I told you in the beginning of this market review, I've studied NFP. So I'm armed with knowledge. That's why I'm going all the way back up, because I understand NFP delivers all the way down or all the way up, right? And then it goes all the way back down or all the way back up. Go back and do your research, right? And you'll understand why if I was going to long this, I wasn't going for 5 or 10 points. I got too much knowledge to go to 5 or 10 points. I'm going for the whole fucking grip, right? And people say, you hold too long, you could have took profit. It's like, no, you just don't understand the market like I understand the market. And that's okay, right? Doesn't mean you can't make money. It's just we playing a different game, okay? Let's move on to the S&P 500 before I do that, I wanted to show you guys how I got these 3 lines down here, right? So remember I said we're walking into a new neighborhood, right? We've sold down aggressively, right? And we've entered into a new neighborhood. Well, when you enter into a new neighborhood, those people that, the people that are down here, they got to come say hi, right? They like, oh, you in here? We going to defend. I look at the market like a war. It's another analogy, right? But when we're playing chess, right? And we've entered into the other enemy's territory, right? Now the enemy needs to defend their territory. Where do they defend? They're not going to defend if the front lines fail, right? Then they got to go to the midpoint, right? But this down here, this 30% level, this is the last line of defense before they leave the neighborhood and they conquer your territory. So what do I get this level from? If I click on this fib, you'll see the dots light up. It's the range, right? The dealing range, or the other side of the chessboard, right? From this high to this low. And this is when I knock out all 3 of my fibs. I put the 70, the 50, and the 30 here because the market will react at all of these levels. Look at 70 on Thursday at 10 o'clock. What did we do? We were balancing off the 70. Look at 50, right? The NFP candle at 6 a.m. Where did it bounce off of? It bounced right off the 50. And then look at the 10 a.m. 4-hour candle. It bounced right off of 208, right? Like, you couldn't script this any better. So when you understand how the market is developed and where it's trying to go, there's no reason to look for longs at every single bounce, right? While this thing is coming down, just wait till it comes into the neighborhood where the longs are most likely to come to, right? So I just wanted to add that there, and then we'll move over to the S&P 500. As we're moving over to the S&P 500, I wanted to highlight Trading Yoga Girl's pre-market plan. She's been doing an excellent job creating a pre-market plan, and prayerfully she starts to actually follow it every single day, right? So her pre-market plan was absolute sauce, so we'll definitely highlight that. Big picture, bottom of the cup. If you guys don't understand what she's saying when she said this, we had an analogy about cup empty, cup full. It's basically about liquidity, right? Right now we're pouring out all the liquidity, so we're at the bottom of the cup, right? Small picture, we're also poured out a lot of liquidity, so we're at the bottom of the cup. So you understand that analogy. If you don't understand it, you want more, just hit me up later. We're bullish as long as we stayed above 56.80. We're bearish as long as we stay below 58.20. Our range was 58.06 to 58.21. I disagreed with that. I shouldn't say disagree with it. I should just say my range was in a different spot, and I'll show you when I get to my charts. But I understood what she was pointing out here, right? Bottom of the range, even more important, 57.20 to 57.39. She was looking for buyers to defend 57.20 to 57.39, specifically, or in particular, 57.20. She wanted to target 57.46. She wanted to target London at 57.53, true day at 57.64, and then finally 57.87. To the bearish side, she wanted to look for false breakouts at the daily fib at 57.87. She wanted to look to target true day 57.64, London at 57.53, futures settlement at 57.46, break of the range at 57.20, and then finally 56.80 to 57.86, or 57.80 to, I don't know. Yeah, 50. Oh, okay. It's just backwards. All right, cool. So just look at how beautiful this plan played out, right? Daily fib 57.87, right? When did we start pushing up toward that level? Remember, she said highlighting 57.20 specifically. The low of the morning, 57.20, right on the dot. And I know she probably felt FOMO too because she didn't take this trade, right? None of us took it. I don't think anybody in the Discord other than Alex took this trade. He took it on demo, but whatever, right? 57.20 right on the nose. Came back down and retested it at 57.24. Don't panic, don't fret, right? Just chill, right? We pushed right up into 57.77. She was looking for 57.87. The NFP candle hit that, but we came within, and this is what I do, right? Like this is where I get my money box from, right? So what I'll do is with the NFP candle, you know, this is just a little nugget for anybody that rewatches this. I'll take this entire wick of the NFP candle, and anything within 50% of this wick, I'm getting in this motherfucker. I can tell you that right now, right? So let's turn on the macros, and I'll share with you guys kind of where she traded, because I checked her entries, and I'll share with you where I traded as well. You can kind of get an idea of, you know, how you can enter the trades if you're struggling with that. So 950 was the key for me today, or on Friday, right? When I went back to 950, I said, okay, I just missed a massive trade to the downside, which I saw develop, and I knew what it was going to do. FOMO number one, like I explained to you guys. We traded down at 9:29 in 30 seconds. I missed this entry as well, right? And again, there's no harm in missing an entry. The harm is when you start chasing that entry, right? If I miss the entry long and then we come up to an area where the selling started and we don't break the high, and then every time the market drops down, I'm looking to long it. Every time it drops down, I'm looking to long it. I'm not longing it because I think it's going to go yard. I'm longing it because I missed this long. And now I'm only focused on taking the market long, instead of focusing on saying that shit dead, it's gone. What can I do next, right? The next thing I should be doing is looking to get short, right? Because one, short is the true direction of price right now. We're bearish, right? So, okay, I missed the long, but I'm about to go in the right direction of price. We come up here, right? And I'll go split screen. Actually, I got it up here. So give me a second. Let me move this down. This is my Apex execution screen. So the reason why I do this, because I like to watch price on the 5-minute, but I like to enter on the 30 seconds. So when I'm getting ready to execute, this is what my execution screen looks like. And you can set this up on Top Step X as well. My execution screen looks very similar to this on Top Step. I just have the left side as the 5-minute, right? And then the right side as the 30-second. Why am I doing this? Because, well, one, I want to see this 5-minute candle form a doji. Look at the bottom of this wick right here, 57.87. If you look at that same area over here on the 30-second, right, at 57, wait, what is it? 57.67, sorry. So this same area, we had a high at 57.74. We had a low at 57.66, right, which was the low of this 5-minute doji candle about to form. Then we get up here and we just consolidate, right? We consolidate at 52, 53, 54, right? And I got short at 57.74 right here. Why? Because just like I'm looking for this doji candle to close on the 5, I'm also looking for the same thing on the 30-second closer to when this 5-minute candle closes, okay? So as this 5-minute candle is closing, remember it closes at 9:55. As soon as it closed, we were rallying up. As soon as I saw this doji close, I'm in. That's all I need. That's all I needed to see. And I'm in at 57.74 and my stop is above 57.78, risking 4 points. Okay. 5 micros is my size. 4 points is $100. Okay. Keep that in mind. My target was settlement price, right? So my target was this little blue line down here at settlement, 57.46. And if you remember, Trading Yoga Girl's plan was to look for shorts up at this area and target 57.46 ultimately, and then potentially much, much lower. Okay. My entry was at the head because that's what I practice. And I told her, maybe don't focus on trying to get the head because sometimes the head can fake you out a bunch of times, right? If you're not really in tune with it just yet. She did that. She took that advice and she said, I'm going to wait for the break of structure below 57.66. That lets me know that we've officially turned bearish. And then instead of selling right at 66, she waited for price to come back up and she got short 57.68, 57.67, 75, somewhere around there, right inside of this wick, which was a perfect entry, and price ended up going right to her profit target, right? Beautiful trade. I caught about 30 some points. I think she caught about 20 some points. Either way it was beautiful. Now, my other mental fatigue from trading mistake is what I'm gonna call this, was not re-entering the trade. And the reason why, it was Friday. I had a great week. I accomplished everything that I wanted to accomplish, and I didn't want to put on any more risk. That cost me the opportunity, right? Because opportunity cost is a real thing. It cost me the opportunity, right, of making an additional 100 points on the trade, which probably would have netted me about $2,000 on my size. Because after I win my 5 micro trade, I size up to 10, right? Protecting the $200 green day, right? Risking a little bit more than that, and then allowing myself to pad the stats a little bit, understanding like, hey, as long as you're good walking away with, the $400, you can continue trading. If you're not, don't put this trade on. And ultimately, I was not willing to risk any more money. I wanted to just walk away, enjoy the rest of my weekend, and then come back fresh on Monday. That's completely fine, but let's continue to follow price, right? We come back over here, and what did we do? We traded up into 950, down. From this point forward, I mean, basically the whole week, longs have just been scalps to go lower. But from this moment forward, until we get back above an established high, the market is bearish, right? So if you're selling, market goes to sell down here and you get long in here, you better understand where you need to get out at, right? Because every time the market takes a high, you're in danger, right? I'm just going to tell you that right now. The second the market takes a high, you're in danger. The best way to identify when to get out is to take the previous high, which is here, down to the previous low, which is here, because it's the last established low, and you want to target 50% of that range. At 50%, if you're not out, you really need to be thinking about getting out, right? It's okay to long against the trend. You just need to understand how the trend is developed. You need to understand what the high of that trend is, what the market is going to pull back to. The market loves 50%, 30%, and 70%. These are levels that you can go back test on the fib, or you can just go look at anybody that trades a Fibonacci strategy. This is the golden pocket. That's what they call it. Like 68%, somewhere in there is like the golden pocket. I just call it the previous high and the previous low. It's 50% of the previous range. You can draw 3, 30, 50, 70, and the market's going to come back here. So if you're getting long, okay, fine. 57.38, you need to be out or at least collecting as much profit as possible at 51. Okay, you missed the short again. You say, fuck it, I want to get long. We're below midnight. I'm only looking for longs. Bet. Three line reversal, get long at 57.77. But guess what? Draw another fib. You take the high to the low, right? And at 50%, you need to be strongly considering getting the fuck out of this trade. That is a 20-point move, right? If you see aggressive buying coming out of that level, okay, maybe you stay for a little bit. Maybe it goes back to 30%, but you should be protecting yourself at a certain time frame, okay? The market comes back down inside of 1050. 1050 has denied us the opportunity to go higher. Therefore, the next area I would be looking to trade is 1150 because I'm not shorting this shit. I could short it, but it'd just be a scalp down to 1150, okay? It chops its way all the way down into 1150. We trade down into 1150. And this is where my mindset would shift from scalping the longs to holding the longs, okay? Why? Because right here, the market made a new high. Notice how up here you could argue, well, Hobbs, it made a new high here. You're right. It didn't make a new swing high, but it definitely made a new high. Well, I am right, and you are right. But understand the market's going to do this twice, okay? If you understand the sequence of price that I've been trying to preach, the market is going to break a high, and then it's going to liquidate that low. How long that low gets liquidated, nobody knows, right? What we do know is inside of 1150, this move is usually ready to take off. So how deep this goes, nobody knows, right? But once we get into 1150, after we've already identified that we took the high, we liquidated the low, now I'm waiting on the market to take the high once more. And now this is my invalidation point at 57 or 56.73. Once I understand that, I'm not buying shit above this yellow box, period. That's the discipline. Nothing above this yellow box is a buy. Everything inside of this yellow box is warranted. If I see my executions later in the day and I'd be like, man, why did I buy there? Like, because you was buying inside the box, right? So that means now there's an equation that needs to happen. And a lot of people probably skip this step, but we're not in the market review. Now, the range of this box, right, is 11.25 points, right? That's why it's important to identify your box, right? Or identify your range, because now you got an equation to do. My risk is, or my trading size is 5 micros, right? Which means that I'm risking $25 a point. And just to make the math easy, we're just going to fake like this range is 10 points, right? That means that if I buy the absolute top of my box, my maximum risk profile is only going to be $250. That's it. Okay. In this situation, we'll give it the actual size. So let's say $300. Okay. If I can't afford $300, I need to size down. If I'm not comfortable risking $300 at this moment, while the market's doing all of this crazy shit, I got 15 minutes to figure out what the fuck I'm gonna do. From 11:53 to 12:12, instead of looking to try to get into this, take that time, that 20 minutes of time, to develop your trade and your risk profile, right? This is what I do when you guys see me getting quiet and then I finally take an entry. It's because I'm developing my risk profile, because I'm like, okay, I want to maximize my profit on the day now. So in order to do that, I know that my risk profile is 300, right? So now I'm like, okay, what is 50% of this box? Why am I doing that? It's because now I understand that I can double my size down here because I'm very confident in this trade. So I'm going to double my size down here. I might even trade 2 minis, right? But if I trade 2 minis, my entry has to be, right, to fit my risk profile, my entry has to be 56.76, because that still sets me within a $300 risk profile. Now I can just set a limit order right here for 2 minis, right? And I can put my stop for 4 points, right? That gives me enough time to say, okay, now I'm just going to let price play itself out, okay? You get filled at 56.76, you're in for 2 minis. This trade ends up going right to your profit target. You know, our profit would have been daily fib all the way back up, right? And I saw this trade develop, right? Like, this was another trade that, you know, I missed the opportunity, but I had already made the decision that I was done, right? And I wanted to respect the decision to be done. This trade was a 113-point trade. Remember I said in the beginning, or when we were talking, I said that I probably missed out on about $20,000 because I was trying to be disciplined. Doesn't bother me one bit, because I learned a very valuable lesson this week, which is I can be disciplined and I can remain a trader as long as I want, right? Some days you're going to miss out of this. You're always going to leave meat on the bones. Always going to leave meat on the bones. The question is whether or not you got some meat, pause, right? Like, you got to make sure that you actually eating on a day. And we ate good. I ate really good this past week. So let's move on to the NASDAQ real quick and gold, and I'll get you guys out of here. I'm not going to go as in depth on the NASDAQ because it basically delivered. The one thing I will say about the NASDAQ is it's the only one of all of the top-down analysis levels, it's the only one that actually ended up closing right at our level, right? Like, our level was 20,261 for 4.17%. It ended up closing at like 209, right? So got you within 50 points. I mean, it definitely dropped further than that, but we ended up coming right back to the 4.17%. And if you remember last week, the NASDAQ failed to come back up to these levels, and the Dow Jones ended up coming back up to these levels. So you can see how the delivery sequence is just different for every single instrument, right? But ultimately on the NASDAQ, I mean, shout out to Alex. He took this trade over here, caught the bottom, rode it all the way up with 1 micro. I think it hit his TP. I'm hoping he didn't. He cut off the video before we saw where he took profit, but I'm hoping he got out at the 200s, right? 200 points you should never let go on the NASDAQ. We ended up getting an aggressive, what's this thing called? Rejection block on the 15-minute, right? Beautiful inverted hammer candle is what I would call it, right? I'd be guessing by calling it a rejection block, but it's an inverted hammer candle nonetheless. It's a great opportunity on the 15-minute to just draw a box, wait for price to come back within 50%, short it, push it right down. Again, on the other side of price, you get the exact same thing on the 15-minute. A doji candle at the bottom of trend. Again, pick up box, buying anything inside of this box, and we're just going straight up, and we're probably targeting this box right here. Easy motherfucking money on Friday. Like it couldn't have been written any better. And I'm just getting better and better at recognizing what's happening on the market. Before I go into gold, let's discuss the volatility index. And I told you guys on Friday, I specifically drew this black line. It's the only reason why it's here. The reason why is because I said, hey, the market will be bearish until it at least comes back up to retest 50% of this wick, right? The CE of this wick. I said, look for 2350 to act as resistance. Well, we went all the way up and the high of the day was 23.6. And then we immediately started rejecting. And if we look at every single instrument, once it hit that low, once the VIX got to its low on the 4-hour, every single instrument reversed at the exact same time. If you haven't figured out the power of the VIX, right? If the VIX is rallying and you're trying to long the market, Godspeed, right? Because volatility or bear markets, right, are very not nice, right? And if you try to long against the volatility, you better be right. And you better take profit because this market is coming for your soul, right? So don't trade against the VIX is what I try not to do, right? That's just one of my big rules. For the gold, right? Since Monday, we're just going to look at this on the 4-hour because Pippi pretty much got this shit sold up. So like, if you want to know more about it, by all means, give him a DM, right? But Monday, put the low of the weekend. I thought we were going to put the high of the weekend. I'm not going to lie because I was saying it. And, theoretically, I wasn't wrong. I mean, I was wrong, but the idea to short up here was right? Like I said, if we come up here, I'm looking for shorts because that's the CE of this wick, right? The market came back into this wick, right? And I could just draw this out real quick. The market came back into this wick at 50%, right? And boom, it ran it a little bit and then boom, came straight down. She said, you was wrong. I wasn't wrong. I was wrong about it being the high of the week, okay? I wasn't wrong about it being a good trading opportunity to go short. Because all we did once we got up here is just balance out, right? Essentially, once we got up to the highs, you could have shorted every time we came into this red box. And it was just going perfectly back to the weekly fib. From the supply zone to the weekly fib. From the supply zone to the weekly fib. Gold was just beautifully in about a 30 to 40 point range. So I didn't take any trades on gold this week. Well, yes, I did. I took one earlier this week. I think I took the short. Yeah, I took the initial short, and then you guys know my story about my little blunder on when I passed the 20K account. But anyway, those are my thoughts on the market. I know it's long-winded, but I try to give you guys a lot of information on Saturdays because I got a little extra time. That being said, if you guys are struggling or you just need help with psychology, technicals, or anything in between, don't hesitate to hit us up inside the Discord. My name is T. Hobbs. This is the Market Review. We'll catch you on the next one, man. Peace.